We're back on Morning Movers. Wall Street Journal reporting that tensions between the executive teams at Microsoft and OpenAI are reaching a boiling point. Parties are currently negotiating the future of their partnership as OpenAI hopes to transition into a public company. But negotiations have reportedly been tense, and OpenAI executives have discussed accusing Microsoft of anti-competitive behavior during the 6-year partnership. That effort could involve seeking federal regulatory review of the terms of the contract for potential violations of antitrust law. Now, Microsoft shares hit an all-time high Monday, are up 13% so far in 2025. Time now for Options Corner. Joining us to take a deeper look at Microsoft is Rick Ducat, lead market technician. All right, so in the Mag 7, Microsoft has been one of the top 3 outperformers here. Talk to us about the trends that you're seeing on this chart for Microsoft. And when I say outperformers, I mean this year, Rick.
Yeah, mostly, Microsoft as a major component of the S&P, one of those Mag 7 names. You can see pretty tightly correlated with the S&P 500, also its own technology sector here. So an interesting stock, to be sure, a hot topic of this AI, story that's captured so many people's imaginations. We can see now, though, that after we had earnings on our candle chart here, strong gap up on heavy volume here that has propelled us pretty consistently within this rather narrow, rather tight channel between our 2 white dashed lines here, topping out yesterday at 480.69 for those intraday highs. We can also see that in terms of our momentum indicator, the RSI, momentum is showing a little bit of bearish divergence. Not exactly what you would want to see if you were a bull in this name, but at the same time, it's still in the overbought area here. So a bit of a mixed picture here. Being overbought in a trending market is usually a sign of strength. The divergence is a sign the momentum is slowing down and not really matching up with the price activity.
Okay, momentum slowing down. Any other things you notice when it comes to volume or beyond that?
Sure. When we look at our volume profile study, we can see here that the heavy trading areas come in down here near 447. That's the last area that we cleared in terms of this volume study that shows us our heavy trading areas. We can also see we're between our +2 and +3 standard deviation channels. Those come in at 466 and 491 respectively. In terms of the options market, open interest was the highest at our June monthly expiration this Friday, by far the most open interest here. In terms of the call side, 490 was the highest strike. On the put side, 475 and 470. Those general areas are the highest that are closer to current prices.
All right. Thank you, Rick. That's our Rick Ducat, lead market technician. Now take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. So, Tom, what's the approach here for an example trade for Microsoft, especially when you think about, its outperformance among the Mag 7 year to date and any kind of potential fatigue around it? What's the approach?
Well, I think you take a look at, the charts that Rick kind of laid out there where we're in overbought territory as far as the move in the shares. Throughout 2024, Microsoft underperformed every Mag 7 names and the overall market. Now we're starting to see that resurgence. You look at their last earnings event, which started this trend higher. As being the catalyst, cloud revenue grew about 33% for Azure. That was above expectations of about 30% growth. So it's on the right trajectory, right? Hitting those all-time highs just yesterday, pulling back around 475 this morning. So I looked at a strategy a little bit more conservative where if this stock does maybe consolidate, does maybe pull back a little bit, I can take advantage of that. And if it continues to move higher, you can profit on this type of strategy also. So I looked at buying an unbalanced put butterfly where actually I'm going to take a credit in upon initiation. So going out to the July 18th monthly option, so you got about 31 days till expiration. We're going to buy one of the 470 strike puts, sell 2 of the 465 strike puts, and then buy one of the 450 strike put. So it's an unbalanced or broken wing put butterfly. You're going to collect roughly, if we open up here around 475, around 250 credit for that. So what does that mean? Well, anything above that 475 level is going to be where you get to keep that credit that you collect, that $250 credit on that. You see a little bit of a kicker here at or near that short strike around 465, which would be about $10 below the current share price in there. So as the stock falls, if it does fall, you get a little bit of a kicker there. Now, where's my break even on this one where I start to lose money? It's all the way down at 457.50. That's about 3.5% below the current share price. So you do have that cushion to the downside before you start getting hurt in it. Now, what's our risk? All the way down below 450, we've got max loss potential of about $750. If it settles right around 465, that strike where we sold 2 options, that's where you get the max profitability. But a little bit more conservative, you profit in 3 out of 4 scenarios on this type of strategy in case it does pull back a little bit.
All right, thank you, Tom. That's an example trade on a Microsoft right there, and that's our Tom.